Hello traders, Gary Wagner here. Just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Friday. Happy Aloha Friday as we say on the islands. August the 2nd, 2019, and this is the Daily Report for Gold and Silver, our weekend review. And what a week we have seen. Utter wild gyrations with the markets moving down on the Fed announcement that they were cutting rates by 0.25%. And the conference that came in afterwards, in which he stated that the series of cuts will not contain a long and protracted timetable. That's what really sent the markets lower. Then, on the following day, a series of Trump tweets came out in which he said that he will begin to impose new tariffs on the remaining $300 billion worth of Chinese imports to the United States, with tariffs at 10% beginning September the 1st. The net effect on that was tremendous pressure in U.S. equities and a sizable spike to the upside in gold as well as silver. What was most interesting about that move is that recently we've talked about the fact that the perception that the Fed and global central banks were going to cut rates drove both U.S. equities and gold pricing in tandem to the upside. Typically, there is that inverse relationship. And traders, that can absolutely be seen when we look at today's price board. I am looking at the Dow Jones Industrial Average, down almost 100 points. We had the same effect throughout other indices. Standard & Poor's down 17.5 points, this being the E-mini, and the full Standard & Poor's at 29.32, down about 21 points. NASDAQ Composite also lost a little bit over 1.3% or a 100-point drop. And then when we compare that to the precious metals pricing, we had higher pricing in both gold and silver, although I marked it out at $12.55 yesterday, so I'm not showing this kind of a change, but it held and closed up near these highs. This is the highest trading point this year, $14.52. When we look at silver, that's also recouping very well from a small little correction, but $16.22, that's up about 4.5 cents. We had a lower dollar. We had palladium continuing, to sink at $14.03. It is now less money than gold. And finally, platinum futures down $3.30 at $8.48. Traders, let's take a look at our technical studies. We are looking at a daily chart. This is the continuous contract of gold futures representing the December contract. The one thing is that you can see in the price quotation bar right here that it's actually bidding it up about $20 on the day at $1,452.50. And that's not factually accurate. To see where the prices actually close, we're going to have to use a 1440-minute candlestick chart or look at the cash market for the proper changes, because I have talked with technical support over at eSignal and they are working on it. So to give you an idea, let's go ahead and convert that. So we've got 1440 minutes. It represents a single day in time. And what you'll see is how the candlesticks have changed, because this is truly a reflection of what we've seen over the last 3 days. We can see that the market closed here and actually opened at the same price point and traded a little bit off of that, although it made a higher high, and it actually closed about $4 lower. And the easiest way to see that, of course, is to look at what we call spot or cash gold. Now go ahead and pull that up for you. And what you'll see is this is at 1440 and it's putting it down $4.60. That being said, this has been an extremely wild week for gold. We have seen it sell off tremendously, and then at the same time, what we have seen is the market move aggressively to the upside. So based on the factors that I've spoken about and the unique financial fabric that is currently moving equities and gold, what do I see in the near term? And then what do I see in terms of a more long-term view? And the first thing is we have to acknowledge that this market hit highest trading point we have seen really for quite some time, and definitely this year it is a new record. However, we did see a little bit of weakness come into the market. This represents today's candle. And when we look at a current Elliott wave count, it is predicting that this might in fact be near the top, if not the top, of this component, this leg of the rally, in which we will get a series of 5 waves. A wave 1, wave 2. This is that long protracted wave 3. It is now predicting the possibility of moving into a wave 4. And what it is looking at is price points that the market could trade to for a mild correction before recovering. The first point would be $416.90. And then the second price point comes in as a 0.38% retracement. And that price point target comes in at around $1,387. I would look for the more shallow number, meaning 1416, to be where this market finds support if in fact it corrects come next week. If in fact this market barrels through this price point and goes to new highs, then we're still in a wave 3. Now, in terms of my forecast for the market, and this again is short term, I have adjusted my Fibonacci extension because now we have a potential top in place, which comes in at 1461, and we're marking it from this particular point at 1268, and we get our numbers here for a potential correction, but we also get a upside target of 1507, and that's where I think this market is headed, 1500 and above over the next 30 days. And traders, to look at my long-term forecast, we really have to look at it in 2 ways. This is a very, very long-term monthly chart. Each candlestick represents a single month. This is the record high that came in middle of 2011, and it's easy to see this long and protracted correction. This is our bottom here, and interestingly enough, if we draw a line across, you'll see that the bottom matches this point in which pricing really took off, and also this high here. We saw it trade from that point to the highest trading point since the correction. It came down, but the low that it contained was above the previous low, and then we had this marked flat top in which on numerous occasions it would stall at about 1370 and then trade lower. That occurred about 4 times. We can see that on this last move it just missed it, came down, and this is what makes this scenario so different right now, is that over the last 3 months we have seen it break above that really strong level of resistance, and then based upon that we believe that we are going to see more upside ahead. Now, in terms of various targets that we are looking at, I'm using a Fibonacci extension for the first one. That comes in at 1507. But what we want to do is look at various areas that were former levels of resistance or support. And if we draw this line across here, it comes in roughly at 1500. That's where I think there is so much validity in the potential for gold pricing to get that high. And that is how I've derived a calculation and a forecast that gold short term will move back above 1500. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.